Hello, welcome to the live financial modeling stream. SmartHelping.com here. So, as you know, we are in the process of upgrading the gym slash fitness center financial model. We did a lot yesterday in this. We got all the new tabs in. All the logic is linked up. We just got to update all the references. We're going to update the revenue logic, and then we're going to do some executive summary stuff and our final checks. So today's a big day. A lot of stuff going on here. And if I could finish this all today, this might be a longer stream. I might stream here for 2 hours, 3 hours, I don't know. But I want to finish this today. And then tomorrow, I can do the pricing discount sensitivity calculator, which is going to be a standalone model, completely separate from this. But I'm hoping to get that done. So don't forget to subscribe to the channel. Check out all the financial models. The one I'm doing now is an upgrade from the industry specific page, and it's right here, Gym Fitness Center. So this is getting a big upgrade. It's a $75 template, one-time purchase. Um, and don't forget to check out other tabs. I got a lot of joint venture cash flow waterfalls, a lot of real estate specific stuff with self-storage, mixed use, multifamily acquisition, a lot of SaaS models, and then some templates in Google Sheets and Excel for HR departments to help track things and for accounting departments to help track things. All kinds of great stuff. So feel free to check that out. I work on this stuff every single day, and we're just trying to make the best. I'm just trying to make the best financial models possible. Okay, so where we left off yesterday on this is we got all the depreciation because we're doing 77 slots. Since it is a gym, there's probably going to be a lot of equipment purchases, so we needed to add more slots here as material to make the model useful. So I did that. We updated a balance sheet with that, and that should be good. Um, let's freeze this top part. So cap table's fine. I think I want to start with revenue. So we're going to look at potentially changing the way this works. The current way is you can enter a starting monthly amount of gym members and then the monthly amount added over time. Now, and you've also got churn. The problem with this is I think we need to do a maximum capacity. So this can't just grow like, say, a SaaS company would just grow its users. They can get as big as, they can support them. Is their infrastructure can support. And it's not hard to expand that. For the gym, you kind of have a maximum capacity, so you want to make sure your assumptions are completely outlandish. So there needs to be some sort of cap on capacity, and then over time you can reach that cap, and then it's kind of stabilization. And then the assumption there is if you reach the cap, you no longer are churning, and you just have you maintain that cap for the rest of the template. That's one way to do it. The other way is we could ignore churn and we could say, okay, uh, maximum gym capacity. Let's say it's, I don't know, 5,000 members. It'll be different for every single situation. But there's some maximum there. And then we just say over time, what percentage of that maximum have we reached? And that's how we drive the amount of members and the amount of revenue. And it's just a net number. We're not looking at churn. And I think that actually, to me, makes more sense. especially for a startup gym where it's going to take a couple years to grow to this maximum capacity. Now, once you're there, it'll be stabilized, and maybe you never hit max. Maybe you end up staying at like 80% of max or whatever. You can all drive that with inputs. So I think that's more intuitive and more. It makes it easier to figure out real numbers or expected numbers based on these assumptions, in my opinion. So let's think about this. So if we have a maximum gym capacity of 5,000, we can say, first of all, I want to pull the net. Well, we're gonna have to change how this works too. So we can have starting gym members, and then we could have um, monthly. Well, so 5,000 would be 100%. So instead of this being percentage, we can put percentage of max capacity attained. This is kind of a little bit of a different way to think about a membership revenue model, but I believe it makes a lot of sense. And for someone to try to forecast how many members are going to have over time, this gives more context than just saying, well, we're going to add X amount per month and for 10 years and try to change that every year. Pricing is fine. This is just a monthly price. It might not change over time. It might. That logic is fine. So here we want to say percentage of max. So we got 5,000. We do starting. We do starting. Oh, starting max capacity attained. So let's say you open the gym and at the very start you can fill up maybe 10% of your max capacity. And then we could say monthly improvement in membership. And it's solely based on the starting capacity. So you can say, okay, 5,000 is our max. We start out 10%, and then we improve that 10% by, you know, let's say 3% in year one. And obviously the max is going to be 100. And we can go and put like total members at year end, and then total percentage of maximum capacity achieved. And then if we go over, let's think about this now. So starting member, so we don't have lost members anymore. Let's clear that out. We have clear this out. We just have ending members. And this is simply going to be, let's see, if this equals the start month of operations, which we have here, then I want to take this number, 5,000 times 10%. Otherwise, if E4 is greater than the start month, then I want to pull this percentage, so index the monthly percentage increase based on the year matching the year on this times the previous month's amount. Well, no, we'll have to put a percentage here. So any member, we'll have to put percentage of max capacity attained. And then that's just going to be times that. So actually this all can go up here. So if E4 equals that, then actually take revenue D7. If it's greater than Control C12, find the percentage rate. And add that percentage rate to the previous month's percentage. And then if it's not, if it's before the revenue or gym opens, then just 0. Okay, let's see if that works. So drag this over. Nice, 10, 13, 16. And then the maximum of this or the, let's see, it can never be over 100. So we want the min value between this and 1. So we go up, 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 and then we'll get to 100 stabilized. And then you're just running operations. Now, when you get to the maximum capacity is going to be based on your assumptions here. And it could be lower. Let's say monthly improvement in capacity attained. And this is kind of cool. So what I can do is go sum is the total percentage. Actually, no, we don't want to do that. Let's put actual dates in here. Okay. And then, so the percentage we'll just do is index. Then we want to pull this over to show ending capacity to member. Should be this down here. So here you see your growth in getting to 100%. And then this is the membership, which, and this will be a nice check. We can actually do this and check it with this. Should be the same as just doing this times 5,000. Okay, and then all we have to do now is easy calculation. Percentage attained times the max. And then all these revenue numbers are based on that. So ending recurring revenue is all we need here. Which is this. Actually, do we have logic in here? No. All right, so we do Any members times whatever the monthly rate is. So here, 500, you start at 10% max, and you go up to eventually hitting $275,000 a month. Now, figuring out what your maximum is probably more difficult here. So this actually, this worked out good. So, okay, that all matches, so that's good. The logic's working. Total year-end members. And this is nice because then you can see directly how many members you're going to have over time based on these percentages. So if you start at 10, you're adding 1%, you're 11, 12, etc. And it takes you 7 years to get to the max. Now you probably might have faster growth at the beginning, maybe 3%, 2, maybe 3, 2. Now you're hitting max at year 4. The calculation here will never go over 100% on the monthly detail. So there's that. I think this is actually awesome. This is really good. This is better. The hard thing for a user is going to be figuring out, well, what's my maximum capacity? And that's the trick. So if we look here, how to find maximum capacity of a gym. Determine the occupant load of a space. Divide the size of the space by the occupant load factor. Okay, so this is a lot. How do I calculate maximum gym memberships a facility can handle? All right, there's an equation from this site, IHRSA. Solve overcrowding at your gym with the simple equation. That's what we want. Where is it? That's that. Oh, this is a lot. I'm going to put this source in here. Source for determining gyms max members. Because that's probably, if you're doing this, you probably want to read that to get a better number here. Where's the formula? I don't want to read all this. It's good to read if you're actually doing it. I just want the formula, though, for my purposes. Five 5.5% members critical overcrowded. So you rarely get overcrowded. Of that number, 55% fall to the cardio area, usually because of shortage. 47% blame the group fitness. 30% because of gym floor. Limited free weight space. Okay, those are all good things to note if you're going to be starting your own gym. Research conducted by Jerry Salmon, owner. Two key concepts. The value equals utility minus price or value for the money. Equation developed in the Blue Ocean strategy. If people are using their membership frequently, they'll perceive its value. Salmon says if they are not using it enough, they won't perceive its value. Overcrowding is one of the reasons for reduced utility and therefore reduced value. So this is a interesting concept here. What's the formula? How to run a gym at full capacity. The gym reaches full capacity when it's registered the maximum amount of members, which we're trying to figure out what is that, while still operating smoothly with high satisfaction. Though it can be hard to identify an exact number for your particular gym, it is worth defining a ballpark figure for you to keep an eye on. This will allow you to make the difficult decision to put the brakes on membership sales in order to avoid deterioration in service level or members' happiness. Okay, that makes sense. To get your estimated member capacity, add together all stations with your gym, treadmill, as it only allows one member at a time to use. Other machines will allow 2 or more members to train at once, so take this into consideration. Then, depending on the facility type, multiply it by the amounts below. This is another good source. This is actually, I feel like this is better than the other one. Put this one first. Okay, then depends. 25x if your site has only a gym times 30. Wait, add all those stations within your gym. Oh, okay. So this is like a rule of thumb. Add up all the stations in your gym. If a station can have multiple users at once, then count that station. Then that station is equal to the number. For example, if a station can handle 2 at once, then the value is 2 instead of 1 when adding them all up. Once added up, multiply by the below table. All right, this is exactly what I was looking for, just some kind of basic rule of thumb. So based on the gym type, you then can follow these rules here. If your gym has a gym, a studio, so total stations, or no, station description, 1, maybe let's put like, I don't know, enough for a ton, like 15. You might not have 15, that's fine. So description, count per, let's say it's all 1 and that's 2. Total, these are all inputs. So if it's 16, that's saying my maximum, we're probably gonna need more than 15 now to think about it. That's saying my maximum will be 400 for that, 480, or And let's do more, because I mean, I know some places have like 30 or 40, like maybe even 50 stations with treadmills and all that other stuff. Let's put like 40 potential. And then based on that, there's your maximum. So that's like your sweet spot where you're trying to hit, and then you could update these percentages to get to there. So you'd enter, let's put the 1435 one in, and there you have it. Now this is really good to measure based on your station count. This is going to drive a lot of what you're buying for your equipment. So this is kind of a good idea to show, okay, what's it going to cost to buy enough stations to comfortably fit 435 members at 1435 members at once, and you can adjust your pricing accordingly and see kind of how long it takes to pay back your initial investment, all that stuff. So I think this just got like at least 6 times better. I feel like this is definitely cool. Um, so yeah, this is great. This is really cool. Let's clean this up a little. So now that I have this working, and you can look here, if it's $55 a month, our max revenue is about $78,000 per month based on all these different operating costs, which, why are they zeroed out? Do not know. Oh, shoot. So this, we got to update this so it's the start month is correct. Yeah, we're gonna update all this. Okay, let's get the annual monthly on the same page though. So we've got members, and then we just have row 9 as membership capacity. So clear all this. This is the ending member count. It's just going to be index, look up the monthly table. If we match the end of this year. Okay, so there's our member count, and then percentage is the same thing, but the row above it. Okay, capacity goal. So that's good. Revenue, this looks good. Make sure that's the same. 7.9 million. Yep. Put this as monthly revenue. Annual revenue. Okay. 15, 16. Oh, wait, this is it. Monthly revenues in 16. Let's remove all those spaces. So year over year is in 7. Any members in 8. Revenue in 10, 11, and 12. Oh, wait. Annual revenue is in 11. Monthly revenue 11. That's good. Oh, circular reference. Dang it. Not sure. where that is. Let's see, this is 14. We're off by 1. Uh, let's go down 1 because we want these to line up. So 15, 15, okay. Now, let me close out of this. Okay, got a circular reference. We'll figure it out. So instead of this used to reference executive summary to figure out the end month. Now it needs to reference the global control tab C6. So what we do, replace all, and we want to replace only on this sheet, and we want to replace anything that says this. And instead we want it to say global control C6, I believe it was. Perfect. Now that looks like it's going good. All the way down to insurance. Yep, that's the last one. That's May 2022. May 2022. So this is working great. So we've got total running costs, EBITDA. Now it's likely some of these costs aren't going to begin until you start operations, but the numbers are arbitrary. That I put in. You'll put in your own numbers. And based on the OPEX and revenues, you get EBITDA, which is your operating profit or loss. We're at 42,608. Make sure the annual's the same. Yep, 4,268,40. 4,000,000. So, and one of the big reasons why you want your revenue numbers to be relevant, and you're going to put these stations, I mean, that's a really big factor as to how much are you spending on all your CapEx, and then how much revenue can you expect to make from that based on achieving this max capacity at some point in the future. So you got a lot more context now with this setup for the revenue. I think it's really good. Let's make this look nice. Okay. Very good. So the most important thing is we get the monthly and annual down pat. CapEx is now completely different. $48, so we don't have enough spaces here. So needs to go down to 80. And see, these startup costs are now going to be a lot smaller because we switched them around. All right, so there's that spend, and the spend is going to be simply cash flow, whatever this is. We don't. Oh, I forgot. So after I update these, I always just do one line for the capex. So we actually don't need any of that. This CapEx is just going to equal cash flow CapEx row. And that'll come through as a positive. So we can subtract it. Also, we need to update this cash flow because this is not pulling everything. Oh wait, yeah, it is. Down to C80. Oh, and then all these are March 2022. So this total should match. So 2.3 million. Should match all of this. Perfect, it does. I've got a circular reference error somewhere still. Good to know. Let's widen out these columns. Delete all of this. Two 3025, so that's the same. Other cash flow items. We'll put all the cash flow stuff here, right here. When we're done with the income statement, balance sheet, cash flow statement, we'll do that. Startup costs are now just much smaller. Yeah, only down to 20. Startup costs. Oh. So we don't need any of that. This is going to be equal to startup cost amount. And annual is going to be the exact same. All right, 5611, right? That's good. 101, 101, perfect. All right. So we got our revenue, we got our OPEX, EBITDA, debt service. Let's put something in here just so we could see. Okay, there is numbers in there. So why? Oh, this is just financing amount. Where's our debt service? So no border here. Ah. Okay, so we're gonna update that. We have a better way to do this formula now. So principal, just sum up D if it matches the date. Oh wait, and then we can adjust this. 12 divided by payments per year. So if there were 6 payments a year, perfect. If there's 2, okay, so that works. All right, lock this for principal, and the interest is going to be column C. So there's that. And the exit, we got the principal paid back. That's good. Okay. We're getting there, guys. We are getting there. We don't need any of this stuff. That'll be up top in this new section. We've got another cash flow items. I had a couple slots here. This is one of the hardest parts, is making sure the monthly detail all matches up with all our new logic. Still got a reference error. I wish I knew where it was. Okay, so we've done some really great stuff with the revenue assumptions. This is like really, really, really good. I love what we did there. Let's now get the income statement going. So we've got membership revenue. We just pull in from right here. Now the reason why we are adding all these income statement, balance sheet, cash flow statements is it's a formalized way to show the results of operations. Cost of goods sold we don't have. We're just going to clear that out, but we'll leave it as a space. And then OpEx, we've got running costs, startup costs, and that's it. So here, running costs, we can simply reference total running costs. And then you'll see how all the checks at the end make sure that all of this stuff matches and we're not forgetting anything. Startup cost. Okay, EBITDA, interest is looking good. Depreciation we went through and updated. All the way down the line, that's good. Sale of business. So this looks updated. 3130, yep, okay. We're going to do trailing 12-month EBITDA to get the valuation based on a multiple of 12-month trailing EBITDA. Annual, let's see, so we clear this, clear this, clear this out, and then our total, so sum total of the monthly net income minus this should always be 0. Good, so that matches. All right. Now let's get into cash flow next. So customer receipts is just revenue. It's taking row 10, which is fine. Other OPEX. Let's see, that's doing 25 and 15. I believe all we need is 25. Yep. Interest, that's right. Taxes, 120. Yep, that's good. So net operating activity cash effect. Then we've also got our CapEx expenditure, sale of business. So sale of business is what we got to do now. So let's look at what we've got here. Terminal value 12 months trailing. We're going to do EBITDA, not revenue. Annual revenue, annual EBITDA multiple. Then the business valuation at sale. So this number, we don't want 10, we want row 28. 6x, so there's our valuation, percentage going to extraordinary income versus fixed assets. Now here, it's all fully depreciated except for this amount. There's only 154,000 to go towards that, which you can see is all going towards this. Now, if everything's fully depreciated on your, and it probably isn't, because I think equipment, the useful life should be like 15 years, I believe. Let's check real quick. Useful life of equipment, of gym equipment. Oh, 5 years. There's different things you can use for depreciation. So it looks like 5. Okay, so if you're running your operation, it's likely that at the end, these will all be depreciated. You might have purchased some new stuff, so you can always do like, you have your first round, the first 5 years, your second round of purchases, the next 5 years, and you'll have depreciation. It's not a big deal. This is just for tax. It'll populate the tax stuff. If you don't want to show taxes, you just zero out the tax rates here, and that's will not matter. Okay, so terminal values in here. Let's see if it's pulling over. It should be, yep. So depreciable S plus this. So this total 4928 should equal. We're off by a bit. Am I missing? So sale business, sales depreciable assets. Let's see, what are we out? Here. So we're pulling in the 154. See, this is always complicated because I had to update the CapEx schedule. So we got, so what's that 154? Oh, right. So all this is fully depreciated. All the items from, not including the building, you're going from row 4 down. There's nothing there to apply that to. So in the terminal value, I would just put 100% in this case. And now that 5,082,000 matches this. So cash flow is good. We also have financing activity. So that was investing activities. Now we have financing. That looks good. Principal payments, that's good. Sale of stock, that will come through once we do the cash flow. Okay, so cash flow statement's good. Let's go to balance sheet. That's fine. This is all updated and fine. We updated that. Nice, we're balanced. That's really good. So balance sheet monthly and annual, we're good to go. Now, to figure out the actual cash required to launch this thing, we have to add these other items into here. So there's a bunch. So on this monthly detail, we have to do taxes. So we have CapEx, taxes, um, sales proceeds from fixed assets, sales proceeds from business exit. And if you don't have an exit, you can always put no here, and it'll just run to the end of the last month you enter, and it won't have any exit numbers in there. All right, so taxes is going to come through as, I want all these numbers to be a positive value, and then I'm going to subtract them out. So taxes is on the income statement. Actually, we'll go cash flow right here. Okay, and then sale depreciable assets, proceeds from the exit. Now if we drag all this over, down here we have actual cash flow. Actually, we don't need this. Down here we have cash flow. And let's see, that's startup costs, financing, subtract CapEx, subtract taxes, add this, add this. Let's, hold on, we gotta redo this whole thing. So let's start with EBITDA. So operating revenues minus debt service minus CapEx, taxes, plus this, minus this, plus this. Okay, now that total, if we drag it across here, these are negative because taxes in that last year, that's fine. We have a nice key metric here, EBITDA per user, it's kind of cool. All right, now the question is, so running cash position is this. And the minimum value here is our equity required. So that's one of the big things the model actually solves for. Okay, so still don't know where. Oh wait, do we fix that? It looks like the circular reference has fixed itself through one of the updates we just did. Let's update our annual summary, and we're getting real close to wrapping up here. Don't need that. Cash flow. Actually, we can just copy this down. This is the same references. And then our ending cash position here should always match the monthly. Perfect. That means we didn't miss any reference or sums from monthly to annual. Now I want to remove some of this. So many spaces in here. So 3, 1, 2, 3. Or remove 1, 2, 3 here. All right, that's looking pretty good. Now the big question is, oh, there's still circular reference, son of a gun. So we're going to have to find out what that is, which we will. All right, now global control. So total equity required for the project is going to be min of monthly detail 106, which should be every single possible thing that affects cash flow and the timing of that. So 2.971. Okay. So now that flows to the cap table. You figure out who contributes between owners, outsiders, or inside outside investors, insiders, who contributes what, how much of the company share equity do they get between common stock, preferred, A and B, and then this all populates. Now the balance sheet, we should see a 0. Nice, so that's a very good sign. So because what we saw for is minimum equity required, which means the model will go to 0 but never below that based on the monthly cash flows. So we're saying if we raise or have or bring 2.971 million to the table, it will cover all the capex expenditures, and when those are purchased, it will cover the startup costs and any burn of operations without going below 0. Okay, so that's a good sign that that's there. We're balanced all the way through. Perfect. All right, this is great. Distributions. Let's see, distributions. So we want to pull 105, which I think it's actually doing. Yep, 105. Okay, so this we don't, well, we can keep this. It's just going to be referenced, reference values. So we know outside investors are going to come from right here in the cap table. This is the owners, and this should be the total, 2971. Share profits, cap table for investors is going to be this fully diluted ownership share. Okay, great. Good. So that's fine. Remaining equity. So here, what did we do? Monthly 105, which is your year 0 cash flow plus the equity in, which is 35 and 39. Okay, that's good. So if we sum up this, we get 4576. 4576, 441. Perfect. Yep. So that matches that. This is all good. We got a visualization here for investors versus owners. Okay. We'll have to do the executive summary. Which will do revenue and ending users. There is no cost of goods sold. We just have running expenses. This is going to be that total. EBITDA 1499. This is not 1499 here. 4260. So what am I missing? Oh, hold on. Wait. 7966. All right, so I mess year-end revenue. This number. Oh shoot, it goes for 10 years. My bad. 1, 2, 3, 4, 5. Okay, there we go. Now we are at 4260840. Perfect. All right, let's update this. So taxes. CapEx. Debt service. Startup cost is good. Proceeds from exit. Business. Loan proceeds. Proceeds from fixed assets. All right. Then let's add all this up. So we got EBITDA minus this, minus this, minus debt service, minus startup costs, plus that, plus that, plus that. Whoop. And we need to put that for this. Drag it over. Oh, did we get everything? 1493. We're missing something here. Yeah. So proceeds from exit. Oh, we're missing that. Okay. Loan proceeds. 4576 441. Looking good. All right. So executive summary matches, distributions look good. This needs to go all the way to L. Okay, that looks good. So executive summaries all lined up. Distributions is all lined up. We'll add these charts. We'll update these charts here. We don't need any of this stuff. Oh, actually, I do want to keep this to, well, let's see. Yeah, I don't care about any of this over here, though. We'll call this visuals. Oh. And then total revenue. So this looks like we're already set here. 4260. Yep, that's good. Debt service, capex. This we can add in both these proceeds. And this we all have elsewhere. Actually, we're gonna update these references. So revenue, I'm actually just gonna pull from right here. Expenses. Okay, so that's got new data. Accumulated cash flow. Okay, that's the right one. Okay, so that's fine as it is. Um, I just want to see something. Let's put this at. Let's update some of these. So we have a higher capacity. I just want to see something. That didn't really make a difference. Let's do. Just trying to see positive cash flow over time or cash position. Let's get this a little bit faster, maybe. And then add some more of these. Okay. There we go. There we go. That looks better. Where is the circular error? Membership summary. Oh, this is cool. Okay, so these are new metrics. So we'll do year-end capacity attained. Oh, is this? That was my reference error, hopefully. There's capacity. Then we're going to do year-end member count. Hey, that's good. Now what are we doing here? Combo. There we go. Oh, we do need to do separate axes. Okay, hold on. So wait. Change chart type. So this needs a secondary axis. So this is percentage of capacity goal attained. Oh my goodness. Undo. What the heck? No. Come on. Oh man. Okay. Percentage of capacity attained. Total. We'll just put member count. Okay. There you go. That service coverage, fine. This is good. Now I believe I can remove all of this. Debt service coverage. Change that. Here. Okay, there you go. I also don't like this chart type. Let's just do a straight. There we go. Now clear all this. Delete. Unfreeze. Man, it feels really good to update this template because this is definitely a really popular one. It's done well, so I'm happy to make it even better. I believe the revenue logic we updated was probably the best upgrade, and then obviously it's good to have all the financial statement templates or three-statement modeling integration. All right, very nice, professional. We're not going to worry about break even, distributions. I think we fixed the circular reference error, and I think it was with those charts, so that's good that that's done. All right, well, we're all balanced in the balance sheet. Let's hide these to make it more visually appealing. We can group all that up. The other sections are pretty much fine. They're not that large. But we do want to group up the depreciation. So then you could hide it by hitting this one or two at the top and just see the grand total. Awesome. So we're good there. We're good here. That's good. Good. Visuals are nice. That's done. All right. We are there, man. Let's go. Let's do all our checks. So this is going to be to figure out if um, our all our different statements are matched up, and then I'll start changing some assumptions and make sure everything still balances out. So annual net income versus monthly or income statement. We did that calc right there. Balance sheet monthly. We're just going to sum this up. That always should be 0. 122. Okay, that's already doing it. So that's fine. Annual detail here. Annual detail against balance sheet. So this is a more complicated one. So we want to check against annual detail N106 minus the equity for the project. Okay, that balances. That's good. So 79779 is equal to 48 plus the equity. Perfect. Executive summary. So this is just this number here minus the annual. Distributions to, oh, we got to fix our distributions probably. This should be to L. And then annual details N106. Nice. And then this one. So N57, R59. It's on the cap table. Yeah, we got some issues here. So first, let's get our dates in. And we got to do IRR of each one. We'll give it a decimal. So 0.9, does that make sense over here? No, it does not. So we probably got, let's update this formula. So this is doing the percentage times distribution C9. Oh, that's right, C9. Hold on. Two 648. No, that's not right at all. Did we miss the last year, possibly? Let's see. So we need to go to L. Yeah, L. Hmm. So 2972 is the total that should be flowing here, and it's not. %34. Are they getting 34? No, owners are 34. Owners are 34, investors are 66. Cap table J33. Oh, I hit remaining equity instead of total, so that's 31. This is 31. And then that's 1 minus that. Right. So now negative -0.9 is correct, and then 125.6 for that. Just so long as the numbers are right. Okay. Let's go down here. 125.6. All right, now all our numbers match. Perfect. That's why we have sanity checks to make sure all that looks good. Okay. Man, I think we're ready. So let's do a couple changes to make sure. So if we turn terminal value off, we're still all zeros. If we adjust the date here, let's say the start month is there. That's good. Let's do that schedule. Change this date. Perfect. All right. This is good. Put this back here. Let's change this to a partial month. All right, our first issue. So, wow, it's on the annual net income. So, what's going on here? Why are we out? Is it a tax? Looks like maybe a taxes thing. Hmm. One, so that should be 846. Yep, that's right. 1539. Oh, that actually matches fine. So our net income is out 5 million. Hmm. Is it depreciation? Nope, that matches. 31784. That matches. So we're good on taxes, all of this stuff. So what could it be? Interest 14,694. That's or 146,945. That's right. EBITDA 4223. Here we go. So that's off. Now let's see what item is causing us to be out. Is it OPEX? So 4412021. Nope. Revenue, it looks like 8635. Yes. Okay. So revenue here stops in August. But this is not. So let's go to the monthly. And here we have to say, we have to put in this new logic. If if our month is greater than the end month, then zero out. And this is again why we have all these sanity checks. We can make sure this error is fixed before we send it off. Everything else looks pretty good. Now let's go back. Now we're back on track there. Here, nice, back on track for zero. Let's go back to the end year, make sure that still works. Yep. Partial. Now let's do partial with an end with no exit. Got an issue here. So balance sheet, annual. We are out. Wait, or is it monthly? Wait, where are we out? Oh, annual detail against balance sheet cash flow. Okay. Let's see. So we're at 3659. What is that small of an amount? 6,320. So no terminal value, exit August 30. Ah, 6,000. Okay, so interest, we gotta stop. If this is greater than here, then zero, otherwise go on. And these are all new formulas that I had added, so I'm not surprised that these things are happening. It's no worries though. We're catching them all. Might as well stop that too. Okay, we're back here. Okay, so that solved that issue. Let's make sure it still's fine with a yes. It is. Let's go to the end year. Good. Good. Let's try ending on the year before the last year. Nice. Good. Good. Okay. Let's try a partial year in that one. Good. All right. We are set to go. I'm pumped. This is a huge upgrade to this. I'll probably do an overview video that's like a 10-minute overview of the whole template and everything all in one shot. I'll do that tomorrow, and we'll go from there. Hopefully I can do the other. So now all I have to really do is update the index tab, and then this will be ready to go up everywhere. Or it'll be ready to be sent out for purchases. Really happy with the whole thing. Really, really happy with the update to the revenue logic. That was awesome. This whole thing is really, really good. And when you actually build this yourself, put your own numbers in, actually put in your expected equipment and what that means in terms of how many stations you have and how many people can be at. Essentially, you can read these two articles and it'll show like Based on the type of gym and how many stations there are, this is your max comfortable capacity, and then you can define how fast or slow you get to that capacity and what your revenues are per month. That is awesome. So this model got a huge upgrade. Pumped about it. Don't forget to check out smarthelping.com for over hundreds of different startup models, cash flow models, real estate, SaaS, all kinds of stuff. I put this much effort and detail in every single one. They're all unique. Um, Subscribe, like the video. I will see you guys tomorrow. In either, I'm definitely doing an update video on this, and then if I feeling good, I'll try to do a stream on a price discount sensitivity template that's separate. We'll see about that though. Alrighty, take